So that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as the cues in the world of F&O. Hormaz, good morning. I'm going to start with you. Today is going to be expiry. We have a lot of handover that's coming in from the global market. So what is the indication and factors that we're keeping an eye out on in terms of cues for the market?
Well, indeed, and you keep an eye out on a lot of things actually, but of course Operation Sindoor remains the key monitorable. The progress made over there, the situations evolving at the border, that will continue to remain the key monitorable for today's session as well. And just like yesterday, the bulls will be hoping for a measured and a matured response to the events that unfolded yesterday. We opened gap down but recovered most of those losses, ended in the green in yesterday's trading session on the Nifty, closing above the mark of 24,400. A big contributor to that was the Nifty Bank, led by HDFC Bank, SBI, Kotak. All of them contributed to the gains in yesterday's trading session, and that 24,400 to 24,600 range remains the one to watch out for the Nifty. Yesterday's low of 24,220 is the first important level on the downside. In case of any, that will be the first one to watch out for. But of course, we need to watch out for yesterday's high as well on the upside, and those levels of 24,600. And for the Nifty Bank, yesterday's low of 53,900 remains the first line of defense for any potential fall in the banking index as well. Of course, as I mentioned, Operation Sindoor will remain the key monitorable for today's session. Of course, today is the weekly expiry as well, and it is the day when a lot of sector leaders report results, be it L&T, be it Titan, be it Asian Paints. That would be an important monitorable as well for the index. Of course, there are a lot of broader market names as well reporting results. Earnings reactions will continue, but for now, the handover is a positive one, but for domestic triggers will be the important ones to watch out for. The GIFT Nifty for now indicating a start marginally in the red for our own markets.
Well, marginally in the red, that is what the GIFT Nifty is indicating. But we now have Mangalam joining in with cues from the F&O space. Good morning, Mangalam.
Good morning. So, like you pointed out, it is a Thursday, it is the weekly options expiry, a lot of cues coming in from local and international factors. But amidst all of this, if you look at the market, it tells you that maybe there are no cues. I'll tell you why, because there have been such narrow-ranged consolidation. Yesterday, the mid-cap index did a lot better. That was heartening. But if you look at it over the last 4 trading sessions, after the big rally that we've seen from the lows, the Nifty is consolidating between 24,200 to 24,450 itself. A 50-point here and there, sort of, from this broad range is what we've been seeing. Nifty high of 24,589 on the 2nd May and high of 24,450 yesterday. That's mainly been the broad range on the way up. At the lower level, 24,200 to 24,350 has been the support zone for the market itself. So 200, 250 point sort of band is what the market has been meandering around. Cash market flows are positive. Both DIIs and FIIs, they continue to buy 14th straight session of FII purchase in cash market. But the headline for this morning is definitely the FII purchase in index futures. 469 crore worth purchase. And there you have that chart up for you on the screen. The last number is plus 458 and 50% long exposure. It's the first time FIIs have gone net long in index futures all the way since October 4th, 2024. So this is a seminal moment. Very important to see where the market goes from here on, because the clients are on the short side. For today itself, again, this range is likely to hold out. That's what option writers are believing. 24,400 call and 24,300 put. Fairly active. Option writers expect a 24,250 to 24,450 sort of range on the frontline index. However, were we to break out, there has been active call buying at 24,500 and 24,600 as well. So I'll keep an eye out on that. And in terms of stocks, I'll definitely watch out for Asian Paints. Had been recovering from lows, but ahead of numbers, a lot of short positions have been added on that stock, ended about 3.5% lower in yesterday's session.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on cues in the world of F&O. But which are the important stocks to watch out for in today's trading session? We have Ria to give us all the stocks, as well as give us the list in terms of earnings as well. Ria.
Well, yes, good morning. Let's take a look at the stocks that are going to be in focus today. We have a lot of companies reporting their Q4 numbers. First up is Dabur. The net profit has seen a decrease of around 8.5% over the previous year. And the EBITDA has also gone down by around 8.5%. Margins have also seen a contraction, coming in at 15.1% versus 16.6% that we saw in Q4 of last year. For Blue Star, the net profit and revenue have both have seen increases of around 21% over the previous year. Margins have been largely stable at 7%. For Coal India, India, the net profit has seen an increase of around 12% on a year-on-year basis, and EBITDA margins have also seen an expansion, coming in at 31.2% versus 29.8% that we saw in Q4 of last year. And further, they've also signed an MOU with AM Green Ammonia India to supply renewable power for its green ammonia project. Tata Chemicals has also reported its Q4 numbers. This time around, we've seen a net loss of around 56 crores versus a loss of 850 crores in Q4 of last year. EBITDA margins have also decreased, coming in at 9.3% versus 13.8% in Q4 of last year. And they're also going to raise up to rupees 200 crores via the issuance of NCDs. For Symphony, the net profit and EBITDA have increased by around 65% and 88% on a year-on-year basis. For the revenue, that has seen an increase of around 47% over the previous year, and margins have also come in at 22% in this quarter. For Voltas, the net profit has come in at 241 crores in this quarter. EBITDA has seen an increase of around 75% over the previous year. Margins have also seen an expansion to 7% versus 4.5% in Q4 of last year. For Niva Bupa Health, net profit has seen an increase of around 31% over the previous year, but the operating profit has gone down by 43% on a year-on-year basis. For United Breweries, the EBITDA has seen an increase of around 31% on a year-on-year basis. Margins have also improved to 8% versus 6.7% in Q4 of last year. Volume growth has been seen at 5% versus our estimates of 4 to 5%. Shifting away from earnings, K Fintech will be in focus. Some sources have said that General Atlantic PE is likely to sell approximately 6% of the total share of the company via block deals today, and the deal is likely to be at a discount of 5 to 8% versus yesterday's closing price. So keep your eye out on all of these stocks today.
Thank you so much for that, Ria. But